Hello, I'm Stephen Hurd from My London Home, and I'd like to talk to you today about ATED, Annual Tax on Enveloped Dwellings. Now, this may have missed you because when it first came out in 2013, it was only for properties over £2 million. But in the current tax year, if you own a property in the UK, in a corporate structure, a company, whether that company be UK based or overseas, then you're going to be liable for ATED if the property is worth over £500,000. That's changed recently, so now the new tax is catching many more people. Give you an example of ATED. If you owned a property in the UK valued between £1 and £2 million, then the annual charge for ATED will be £7,250. So it's quite a significant charge. There are also lots of penalties for not paying, but also for not registering and sending in your annual return. Returns are due in with HMRC every April, on the 1st of April. No jokes about April Fool's Day, but payable on the 30th of April of that year. There are some exemptions to ATED. The primary one, which will probably affect you, is whether or not you have the property let on a commercial basis. It can't be let cheaply to friends and family. It has to be let commercially. And if it is, then you could well be entitled to an exemption. But even if you are entitled to an exemption, you still have a responsibility to make sure that HMRC have your annual return requesting the exemption every year. Otherwise, as I say, you could fall foul and end up paying some penalties to them. If you purchase a property and you use a company vehicle, you have 30 days from completion to inform HMRC that you've purchased using a corporate structure. So that's quite different. You can't wait until the next annual return. You have to notify within 30 days. And I believe it's 90 days for a new build property. But of course, really, if we now consider that over the past few years, the UK government have taken out any inheritance tax benefits for any property that is subject to ATED, but also now have made sure that any capital gains tax that you're going to pay is going to be at the higher rate of 28% if you're an ATED registered property, then you may want to consider de-enveloping, and that's the term given to taking your property out of its corporate structure and then holding it yourself personally to avoid any ATED. Now, you really do need to speak to your own advisors as to whether or not that's the right thing for you, because there are going to be charges. Stamp duty for one. You to take a property out of a corporate structure and hold it personally, you're probably going to be liable for stamp duty. So what I'm going to advise you to do is, if you're not already dealing with ATED, then please get in touch with an advisor and start dealing with it sooner rather than later to avoid any excessive penalties, and also discuss whether or not you should be taking the property out of the corporate structure and indeed holding it personally. If you don't have an advisor looking at this at the moment, then get in touch with me and I can point you in the right direction if nothing else. Again, my name's Stephen Hurd. I'm the founder of My London Home. My email address is Stephen with a V, Steven, at mylondonhome.com, or you can call me on 0207 222 2500. Take care.